as well, who joins in on the show. And Sandeep, let's get in your thoughts first up on those PSU banks, because we were talking about how now the risk reward is looking quite favorable. The margin of safety is good for PSU banks. Do you think that that catch-up play to some of the private banks now is going to play out?
The PSU banks typically we've seen join the party at the end of a rally. So that's not to say that we are reaching the end of the rally currently, but then the possibility that there could be some rally in those banks is highly likely, because the other financials are rallied. Like in terms of banks, private sector banks, majority it's been led by HDFC Bank. Other banks have still lagged behind. So my guess is that some of the other private sector banks actually could also participate. The key risk in PSU banks remains the squeeze in margins, which could start from this quarter as they lose CASA deposits to private sector banks. So I think that's the risk which investors need to be aware of.
Right. Sandeep, since we are on the subject of banks, I want to pick up on HDFC Bank. The fact that their standalone business sequentially, the loan growth is at a 26-quarter low. The merged business loans are an uptick of about just 0.6% on a sequential basis, lower than what the market was anticipating. You think much of the rally now with HDFC Bank is behind us?
Yeah, in the short term, it's most likely because one, HDFC Bank has rallied much sharper than most of the other private sector banks. Secondly, they are focusing on the integration right now, and as such, but because it was the same group, so integration might happen faster, but then the risk related to margin squeeze due to CRR, SLR requirements, as well as with the combination of the lower growth and fall in CASA on a standalone basis also is a risk to earnings in the short term. So I think post-merger, a few quarters were always likely to be tough in terms of profitability, and that could play out. So the initial rally as the merger got confirmed has played out now. So from here on, I would agree with your assessment that we could see HDFC Bank actually underperform the rest of the banking sector for some time.
Okay, fair enough. Let's move right on then and get in your take as well on some of these FMCG companies, because Sandeep, the kind of Q1 updates have come in have pointed out that to pretty soft when it comes to the likes of an Adani, Wilmar, as well as Marico. What is your reading, and do you believe that this sort of low single-digit growth for the India volumes is likely to continue?
So I think this quarter was likely to be soft, but the advantage from the FMCG pack overall is that raw material prices have come down significantly. So I think the margins could have bottomed out for a majority of FMCG companies. These two companies, Marico as well as Adani Wilmar, are highly dominated by the performance of edible oils or oils. And to that extent, they suffer more because the edible oil prices have come down sharply. For other companies which have more branded FMCG categories, there actually the fall in oil prices will actually aid their profitability rather than hit it. So I wouldn't read too much into the performance of these two companies as a flow through to other FMCG companies.
Sandeep, good to have you back. How are things? Hope all's well.
Yeah, so far so good.
Yeah. How's your dad? Hope he's feeling better.
Yeah, still in the hospital, but recovering. So hopefully he should go.
So wish him a speedy recovery. So nice to have you back. The auto space is going through a bull run like never before. I look at the monthly dispatch numbers for auto companies, they are okay. But if I look at the stock prices, whether it is the stock price of Maruti or Tata Motors, even for that matter, Bajaj Auto, TVS last year, it's wow. So for a sector which is growing selectively, why are stock markets going through this mega bull run?
So if you look at it, Nikunj, many of the auto stocks did not participate at all. If you leave aside TVS or Mahindra and Mahindra, which were the initial performers, the rest of the stocks actually did not perform. And in fact, Maruti has not performed. So I'm not wrong, it's reached this level after a long time. So incremental, there were improvements in auto company performances, but then they were not significant improvements. Now there's an expectation, although the volume growth might be moderate for a company like Maruti, but because they are moving up the value chain, in terms of value, the growth will be better and margins will improve. And the markets always tend to be forward looking. So I think the fact that there is a belief that interest rates have peaked out, and as we move to the festival season, we could see volumes revive. And the monsoon performance till now also has been pretty okay relative to the huge negativity that got built up initially. I think there are several factors contributing to that, along with the fact that raw material input prices have remained subdued. There was an initial rally due to China reopening, but that also has now subsided. So steel prices, most of the input prices have again come down. So there are several factors contributing to this, along with the fact that auto stocks are still pretty under-owned by most institutional investors.
So Sandeep, I'm assuming that while you were traveling, you were still connected and you must be buying and selling stocks. What did you buy last?
I've just been watching.
No, I don't believe it. I don't believe it. Are you saying that in last 10 days, 15 days, when you holiday, you didn't buy, you didn't sell anything? Or you didn't track the markets? Come on. It's
Nothing I can.
So
No, I'm telling you frankly, because this rally was expected, so and it's playing out. So I think what we held on is doing well.
What are you? So let's understand some of the stocks which we've discussed where you've been an advocatory of them and those stocks have done well for you. I distinctly remember in January, February, when we started talking about outlook for the year, your view was buy Tata Motors. Operating leverage would kick in, financial leverage would kick in, and while other stocks done something extraordinary this year. Is Tata Motors or Tata Motor DVS still a hold?
Yeah, I think it's still a hold because of the fact that there were people who believed that Tata Motors will perform for several years. It did not perform, and people got disillusioned. And I think around end of next year, early this year, many of the people exited, investors exited, or did not focus on it. And the performance improvement has started subsequently. And I believe that it will flow through over the next 2-3 years. When key changes in fundamentals or performances happen, they don't end in 1 or 2 quarters. So I think that's the most important thing we need to realize. So once we have picked up some stock at good valuation, then bottom of the cycle, then we need to wait for 1 or 2 years for it to play out. The initial moves are always fast because people don't own it. So initially you make money faster, but then it becomes steadier. So I would still think that it's at least 1 to 2 year more play, if not more. So we keep on evaluating continuously based on valuations and performance. But I would still think that I think there's a long way to go.
Okay. The second one, Sandeep, which you've been talking a lot in terms of an idea has been Indian hotels. But now if one looks at FY24 and FY25 estimates, it is trading at 30 and 40 times. Is this as good as it gets for Indian hotels also?
Indian hotels is tougher because of the fact that it's performing very well and the fact that, like you said, the valuations are no longer cheaper. So now we need delivery from the company in terms of strong performance for the stock to keep on doing very well. And it's a reasonably owned stock now. Many of the mid-cap mutual fund schemes, if we monitor them, they are holding Indian hotels in the top 10, etc. So it's not under-owned. So from here, returns will be steady. So we cannot expect that the stock which moved up 4 times since the lockdown over 2-3 years will continue to move up like that. The outlook for hotels still continues to be positive. You monitor how domestic tourism is there, you monitor the airport flows, you monitor foreign tourism, tourist inflows into India. I think it's huge. And I would think that a company like Indian Hotels, with the clear management strategy that it has, will be a big beneficiary with the Taj brand, etc. And Indian five stars are still very, very cheap in terms of pricing relative to any of the European or US or even some of the Southeast Asian hotel chains with much better facilities and services. So as India becomes mainstream, I would still think that premium hotels in India should continue to do well over the next few years. How much it is? I would still think we could make double-digit returns out of Indian hotels over the next 2-3 years, but the pace of it will depend on how the company actually performs.
Where will that turn for the market come from, where you need to start becoming outward looking? Pharma IT. Right now the market is inward looking, which is auto, FMCG, capital goods, defense, railways. These are inward looking businesses. Pharma is external business. IT is external business, because that's how rotation moves. I mean, sometimes it's internal, sometimes it's external.
But pharma has not done badly. If you look at the performance of some of the stocks, like some pharma almost at a 52-week high. Dr. Reddy's trading at I think at 52-week highs. So I think it's been disparate in terms of performance. So the revival has happened from the bottom from many of the even the mid-cap pharma companies. Now, for them to sustainably perform, they will need some pricing power, and there are news flow now coming through that some sort of pricing power is coming back in the overseas market, especially the US, in terms of generic products, especially the specialty side. And that's why we also see some companies like Lupin, which perform. So Lupin is a contrarian bet which we took some time back. It did not perform for a long time, but it's done well. So I would think that there could be more upside there. IT is a tougher one because of the fact that the slowdown should still persist. I think the slowdown should still extenuate rather than decrease. So I think that's the risk in IT, and IT is so overowned that, and the psychology of investors also is that they want to buy IT stocks at all times. So the maximum queries I get is, when do we buy Infosys, TCS, etc. So that is the risk for IT companies. So I'm not buying IT companies. There's a risk that there could be some turnaround and the stocks could start suddenly performing very fast. But I think we live with that risk when we do active investing.
Well, the other pocket which has been active of late has been the entire OMC pack. And look at JP Morgan and what they have to say about OMCs. For IOC, they're maintaining an overweight. They've hiked the target price to now 110 from the earlier 100. For BPCL, a neutral stance, target price up to 400 from the earlier 350. HPCL, an overweight again, target price now up to 330. And they're saying that OMCs are in a sweet spot. The discounted barrels are now adding to their GRMs, and the retail gross marketing margins are at a record highs, and therefore they are increasing their estimates across the OMC pack. Sandip, you've though not been a fan of OMCs ever, have you?
No, it's fully buy these stocks because you never know what the government is going to do tomorrow. State elections are coming in a few months. Suddenly there'll be fuel price cuts. And so these companies have no control over their profitability. So how do you buy such companies? I just can't understand how people just tend to give such recommendations and become euphoric at the peak of a possible cycle. I think it's imminent that as these companies recover their previous losses, we'll start seeing price cuts. And along with price cuts, if somehow, for some reason, crude oil also suddenly starts rallying, they are not going to increase prices then. So I think it's a fool's game buying into these stocks.
Okay, there you have it.
Other names which are going to be in focus, and Biocon definitely is going to be one such case in point. They've completed the integration of Viatris biosimilar business over the other 70 emerging market countries. So that's going to be another stock in focus. There's KEC International. They've bagged orders, a sizable one at that, 1,042 odd crore rupees across various businesses. There's Bombay Dyeing, and many reports are indicating that they may be selling their Worli land parcel at a valuation of 5,000 crore rupees. So that's the other stock in focus. And Prestige Estates as well, which is now getting into a joint venture with WS Industries to develop IT parks on about almost 6.5 acres of land in Chennai. So these are a couple of buzzing stocks that we're going to be tracking. Tata Power, of course, I already mentioned that one. And then, of course, there's Ujjivan SFB as well, wherein the Q1 dispersals have come in higher by 22%. And the deposits as well have risen quite handsomely, about 44.5% or so on a year-on-year basis for them. But Sandip, before we let you go, any mid-cap or small caps on your radar? Anything that you're recommending buying in this market?
Some of the earlier stocks which we were holding continue to do well. So I think just holding on to them. Among the stocks which have been consolidating, I think VA Tech Webac still looks good to me because that stock's moved up, it's consolidated, but the performance is quite strong. So I would still think that could have a sizable upside over the next 2-3 years.
Right. Okay. VA Tech Webac continues to be a favorite with Sandip. Sandip, good to have you on the show. We'll let you go on that note. But Kunal, let me